Hi, this is Jack from Alpha Charts with a state of the market video. Today is May 8th, 2021. Before we get started, this video is for informational purposes only. These are not recommendations to buy, sell, or hold any stock or security. I may hold positions in some of the equities mentioned. Know your time frame and risk tolerance. All right, so it's been an interesting week. So we had this sidewise consolidation right over here, and S&P is now back to all-time highs. Nothing bearish about that, really. You see the 23-day EMA has held. The Qs, again, have a different picture, right? So the Qs try to break out and do this consolidation thing, rolled over underneath this important area. The 65-day, which is my orange line right here, the 65-day EMA was the place where it held twice now. And then it kind of recovered and now is sitting right on top of the 23-day EMA. So how do I read this? I think that this is still a choppy mess for growth names. The volume is starting to tick up here as the selling pressure down was going on. So I think that there's some issues there. I also think that that it's making a lower high here at this point. So I think next week it's going to make a decision. And really, when you look at this candle, I mean, it's an indecision candle, right? So it gapped up, it sold off, then it settled out lower than where it opened. So a lot of indecision, a lot of selling into it. Couldn't get above, this 336.64-ish level, or 65, whatever. So a lot of indecision. It doesn't give me the warm and fuzzies as far as being in the all clear. Now let's look at the equal weight. So RSP, which is the S&P equal weight, again, a beautiful candle, all-time highs, which means that breadth is okay, right? Again, but looking at the QQQ equal weight, not as good as the Qs, right? It closed below a declining 23-day, and the 65 did not hold. So that is not as nice as the weighted index, right? Which kind of tells me that the mega caps are holding up the Qs a little bit, and we'll kind of go more into that in a little bit. All right, let's go into IWM. The Russell is just moving sideways in a range. So now the moving averages are starting to converge, right? There's very little distance down between the 65 and 23-day. There potentially lower highs being made. We'll see. Really just choppy range. It's tough to even call that because then there's higher lows here. So Russell, again, a lot of indecision. The prior longer trend is up. Same thing for the Qs, right? The prior longer trend is up. If we throw a 200-day on there, I think I have it on here somewhere. There's 200-day right there. I mean, it's still rising, right? And we haven't even come close to hitting the 200-day. When we go back and look at it, back in this COVID stuff back over here, we sliced right through it. I mean, this so far looks nothing like it. So that's interesting. Also, the other thing I wanted to mention is that there is this divergence on the Qs as well as many other indexes that may be starting to play out, right? So I think I posted on Twitter when it was breaking down here how the divergence was playing out. I mean, I would like to see, obviously RSI breaking the downtrend line. I think that'd be a positive, as well as this reclaiming, 337-ish, back above 337 and RSI breaking the downtrend. I think that's definitely positive. All right, so IWM though, just in a range, nothing to see there really, really in a void in general. So let's look at XLF. XLF has been a standout. I mean, it broke out of, this area, again, that we talked about forever. going back to 2007, and has done nothing but go up, right? It's been a beautiful run back to the daily, just riding the 23-day like good trends do. You know, IYG is one of my favorites in there. And again, it is just, you know, doing amazing. So financials participating and leading the market is a positive for the market. Now, SMH, on the other hand, SMH, you know, too many trend lines. Hold on one second. Get rid of that one. I'll leave 2 on there. SMH started to break this trend line, right? So I was watching this trend line, it broke it, and then it reclaimed it. 23-day is declining, 65-day is flat, right? And just looking at candles, you know, this was a nice kind of reversal candle, but then a lot of indecision as it's trying to move higher. Again, lower high, maybe a lower high. We'll see how things go on Monday. But SMH, I mean, that could be, you know, the tell right here. If it breaks back down below this trend line, I think that's a major problem. But right now, the trend line is holding. This doesn't, you know, obviously count as a break, because if you go to weekly chart, it held, right? It pierced it and then held. So no signal there yet, but again, it's on the precipice. It's not all clear either. It still doesn't look great, especially with this flat 65-day. You know, a quick move back below, and things are, you know, are going to start accelerating to the downside. So not my favorite. Looking at lumber, you know, lumber continues to scream higher, almost in a unhealthy way, right? I mean, look at this white space here. You know, now we're getting a lot of white space here. Not saying it can't go higher. So we don't know if this is the end of the run, but as an indicator, it's still going up, which is kind of nice to see. And there's nothing really to worry about as far as the indicator goes. Next up, let's look at bonds. So looking at bond spreads, which I put a lot of weight into, and I'm going to get rid of the 65-day and just use the 23. All right, so bond spreads, you know, so we may be in a period like this, which ended up resulting in obviously another leg down. And we've seen periods like this before here, and we saw a period like that here, you know, and there was a period here. So nothing I'm overly worried about. It is starting to curl back up. You know, I really want to make sure, you know, watch it stay below 1.52. I would not want to see a higher high over here. But as long as it's, you know, just kind of chops around and then starts another leg down, that would be absolutely fine and very bullish. If we see a spikes that look like this, spikes that look like this and this and this, that would be very bearish. Again, this was an event, right? This was the COVID event. So I don't expect to see spikes like that. But even spikes like this, right? That's these quick spikes in bonds. That would be a problem. Again, quick spikes in bonds, that's a problem. You know, quick spikes in bonds, that's a problem. So that's what we want to avoid. Things like this, like this, like this, like this, and of course like this. All right. And we don't see that right now. And so we'll have to watch them and see. I'm not overly worried about it at this moment, but that could change on Monday, right? So we're watching that. Looking at the VIX. The VIX is, you know, it's declining. That's a positive, right? And again, it's a VIX of the S&P, and looking at, you know, the NASDAQ VIX, again, declining. And that's because the equal weight, come on, I can't type today. Equal weight, you know, kind of recovered, and it's doing what it does. You know, under the surface, we know growth is getting destroyed, though. And when we look at the TNX, we're talking about bonds, so might as well talk about bonds. This is the 10-year yield, and this is I think one of the things I am watching again for a big time clue on what's going to happen. So right now it's just consolidating, and let's just go to a weekly. So here's the weekly. So it had this big spike, and this was again, up until recently, very tough time in the market, and that's what we want to kind of avoid, right? So back in as bond rates were falling, this was the beginning of a great time in the market. And even this choppy area is fine, and slowly change, moving up is fine. But then when you see these big types of moves, that's what spooks the market. These types of moves right here, that spooks the market. So we're watching to see if that happens. Right now it's not, right? And we may still continue to fall back into this 1.5-ish range. That's very possible. But if this ends up being some kind of bull flag in bond yields or something like that, and it spikes up to 3 or even 2, in a fairly quick manner, that's going to create a problem, especially for the growth names. It'll continue to create a problem for the growth names. So we're watching that to see as a tell, to see when the all clears. Now, that being said, if it breaks below 1.35, right? If it breaks below 1.35 and rolls right back over, I think that is an all clear to get back heavily into growth names. I think that things are going to be turning around and looking really, really good. So that's that. Good call ratio. Got a little overheated here, and we saw that pullback. This is really only a signal on extremes of fear, and we're not seeing that yet. If anything, this is showing 1 foot in the door, 1 foot out of the door, maybe a little complacency in the market. So again, not a signal, and nothing to be overly upset about. Really, it's been in and out of this range for a year now. So this is normal price action. We'd love to see it even closer into this range to get even more bullish. Right now, it's a little bit more indecision area. Byline geometric index, again, showing another divergence here, right? So we have it going out all-time highs, yet momentum is declining. But it can easily spike out above this, and this is not an indicator at all if that happens, right? So it's something to watch. And I think Monday, Tuesday, Wednesday, the first part of the week, will decide what's real and what's not. That you can see overall on a weekly chart, it's pretty overheated, right? We haven't seen it stay in this range on the weekly chart in a while, right? Back here, it kind of was, but not even as much, right? You got the dips back. Like we haven't seen this in a long while. So that's kind of interesting. And on the daily, it is showing this divergence. We'll see if there is some kind of check back. And just so, it's only 11, 12% from the breakout. A check back, a 10%, 12% check back, which would be, hurt real bad, feel real bad. It's very possible. So again, and that's why this area was important. Again, this is a breadth indicator more than anything else. Let's look at gold. So here's gold, and it's kind of interesting. It did break the downtrend line, and now it's going to contend with this going to a weekly, right? So there's your potential bottoming pattern, obviously above 184, 185, and it would be a very bullish situation in gold. Right now we're starting to see it, and that was a big bar on gold. And looking at GDX, the miners, again, miners broke the downtrend line big time, and check back, and now it's in an uptrend. So I think miners have got to be on the radar right now, and I think I'm going to put some focus into that in my stocks to watch video tomorrow. But that looks really, really good. Actually, I'm going to digress. I just want to see what Yeah, this is one of my favorites. Earnings coming up, but that's one to watch. All right, let's go back to what we're doing here. MMFI. So it's percent of stocks above the 50-day, and as you can see, it's meh, right? It just shows you that there's been a lot of choppiness in the market, and it's got a rating of 56.9. Again, not really a signal at this point, just really a signal of choppiness. Let's see what gold SPX is. Sorry, back to gold. Yeah, so here's gold SPX, and it was trying to make this bottom here, kind of came back up. Maybe it's gonna, start another run back up to here and outperform. Not sure about that, but that's a kind of an interesting little pattern. And just looking at GDX, SPX, just for fun, because I've not looked at this chart at all. Yeah, so maybe this outperformance that's on the weekly, and here's the daily. We'll see. Yeah, we'll see if this is going to be some kind of rounding bottom right here. Anyway, that's that. So let's go ahead and sum everything up. A lot of indecision out there. I don't think I need to, tell you all that. I'm sure you're seeing it. Growth names really getting hurt. Still, nice day on Friday, but didn't love the sell off. So we had a big gap up for whatever reason, and then it sold off. I think the 10-year is still the key, right? And if you see it, had the big drop, right? And that went with the big spike in growth names. Then as the 10-year started to rise, you saw growth names kind of sell off to close the day out. So even whatever the news was on Friday could not hold the interest rates down, and it probed this area and boom, spiked right back up. I think there's a lot of information in this bar right here that kind of shows the sentiment and what's really going on. I would expect potentially for this to, I am expecting for 10 years to go higher. That's my expectation. You know what, though? We'll let the price action kind of guide the way of yield action, I guess. To see if it does or if it does begins to roll over again. But to me, this seems just like a check back into this area of support and potentially move higher here. All right. So I hope you all stay safe this week. Be careful out there, especially if you pedal in the growth names, if you speculate in the growth names like I do. I'm about 50% cash right now. I don't think any growth names, I have, a few positions on, I have, I think 4 positions on, and, and, uh, and they're growth E, but not the standard growth names again, and just high cash right now. So again, be careful out there. Market could go either way. And as good as the day was on Friday, I can say that I really think that there's more indecision in this candle and more I'm almost leaning to the negative side because the sell off as rates went higher and rates did go higher, that this really did sell off. Levels are clear. 336, 337. I think it's definitely very bullish and a rollover, and we take out 326. And I think that there's a good chance we're going to test 300 again. Just my feelings. All right. Make your own decisions and go from there. If you like, please, if you like this type of content, like and subscribe to my channel. It really does help me, and I do appreciate it. And also, tomorrow, stocks to watch will be out. And again, I'm going to try to focus on some gold miners in there and what's really working in this market, because there are some things that are working. You wouldn't have SPX at all-time highs and the Qs close to all-time highs if there weren't things working. So let's go ahead and find those and dig into those and find the relative strength. All right. Y'all take care.